Morning, everybody. Welcome to day 4. Thank you to Leah and to the staff here for making us very welcome yesterday evening. I think it was a really nice evening. So thank you for that. I think also, I understand there was some very productive discussions during the collaboration time yesterday. So we are returning to measurement, and Dave, perhaps you can update us on the discussions and where things got to on the way forward on IPSAS 31.
So thank you, Chair, and thank you to everyone who showed up yesterday. We had Camilla, Renee, Claudia, Patricia. We had Elizabeth, who joined from South Africa, which was very late for her. We had Angela and Karen as well, and then David obviously is the task force chair, and had some really good discussions. And I'll give a little more background than just the recommendation, but we started the discussions really focused around what the accounting issue was. And it was a really good group of people to have in the room because we had split views on which way to go and went around in circles for a while on that. But what really came through at the end when we summed it all up is there is a public sector accounting issue to deal with here. And what the task force talked about was, it went through a few different options, but the recommendation that kind of strongly comes from staff and was supported by this group of individuals is that we should continue looking into this issue now. And that's really because we have 26 responses to this project, an ongoing project, and we haven't done the analysis to those responses. I'll say, I said it was a really good group of people to have in that room because there were split views. That recommendation doesn't presuppose which direction we'll go. We kind of talked about the two broad directions, whether we'd include COV or not include COV, but maybe there's another option. But what the group of people, and again, staff strongly urge the board to consider or push forward with, is continuing now, because this is an ongoing project and we haven't done analysis of those 26 responses, and that's where we should focus our resources now. The last point I'll make is, and this will have to be left with staff, I don't know what that means for timing. We do have staff resources that can continue working on this, but we need to look at the September, December meeting, whether we have board resources to bring it back. But we do have staff resources to continue to look at this behind the scenes. So Chair, I'll leave it there, but really good discussion, and thank you again to everyone for making the trek over to our new offices to discuss this issue.
Okay, thanks Dave for that update, and thanks everyone for contributing to that discussion. I think that's, from a stakeholder point of view, I think that that is good, because as you say, you know, we have had 26 responses, and I think we owe it to them to make sure that we've really looked into everything that's been said and the various different angles before we as a board determine the way forward. And I think, as you say, we leave it open at this stage in terms of, you know, whether there's a clear view and a report back in September or December, and it'll need to sort of, you know, what comes back and so on. We'll need to sort that in terms of the overall agenda planning. But I think that's, from a board point of view, I think that's you know, that's a good way forward. So I think then that then moves us back into looking at the various different amendments that came out of our discussions yesterday, and clearly in terms of moving forward and the planned approval, obviously anything you know, in terms of IPSAS 31 comes out at this stage, unless it's sort of consequential mentions, but I'll leave Agustina to walk us through that.
Thank you, Chair, and thank you, Dave, for summarizing the discussion yesterday. And thank you all to the members and Elizabeth, technical advisors, and Camilla for joining that discussion. Staff found it really helpful. Right now, what we will be discussing is yesterday we share changes to the final pronouncement that was included previously in agenda item 3.31, and then the discussions that happened on Tuesday. I made amendments to that draft, and I want to thank all the board members and technical advisors that sent me comments, which I have addressed. Specifically, this slide in front of you should show what were the changes that were made across the document. For part 1, where is the applicability of current operational value, we remove the consequential amendments to IPSAS 1. The decision by the board was that that should be addressed through the presentation of financial statements project. We enhance particular application guidance on current operational value, which was discussed with the relevant members. As well, we enhance current value measurement disclosures for IPSAS 12. We have revised the effective dates across the document as the instruction that staff received on Tuesday regarding being a prospective application. We did redrafting of BCs with the particular board members that wanted that redrafting to be done, and then you had an opportunity to look at that yesterday. As well as minor revisions on illustrative examples, that some of them Claudia raised on Tuesday. I don't know if we want to pause here ahead of discussing the other ones.
Yeah, I was just going to say, I mean, obviously there will be the usual editorial process. So if there are any remaining edits, please pass those to staff. But were there any substantive items anybody wanted to raise as a result of those changes? Okay, not seeing any flags raised, so I think we're good to proceed.
Okay, and then the remaining revisions were on effective date paragraphs, just from a perspective, application perspective, and that I had some editorials as well that I went across, but that will be everything that was changed from what you saw on the agenda paper to today.
Okay, thanks for that, and thank you both Agostina, but also for those members who worked with Agostina during the meeting to sort out those changes. And also thank you to everybody for reviewing the changes. Are there any questions anybody wants to raise? Obviously, we did the page flip the other day, but are there any points coming out of the edits made by staff in the document that came round for review? Okay, so I think we're now through that, and I think we are ready to move to a vote.
So just to remind everyone, this was agenda item 3.2.3, if you want to look at the paper that has all of these points in here. But the first point A, we've presented the revised content of the exposed standard, ready for approval. As technical director, I assert we've followed due process effectively, in line with our due process and fully. So now I'll ask the board through Ian to confirm that the board members are satisfied we've effectively followed due process. See nods.
Yeah, no hands raised, so I think the board's content that we have followed due process effectively.
Thank you, Ian. So now I'd like to ask the board to please vote on the approval of the revised pronouncement. So for those voting for, please raise your flag if you're in the room, or your hand virtually or in person online, and I'll just leave them up while I count. Sungjin, you're voting. Are you voting for or?
Mr. Pipes, so which one?
So we're doing a vote now. So I just seeing the members who vote for to please raise their flag. Okay. So my quick count is 15 for. Can we just do that again? Thanks. So if you vote for, please raise your flag, leave it up or hand. Okay, now we have 15. Thank you. You can put your flags down, and just for the record, I'm pretty sure we only have 15 today. So, but I'll ask for anyone who votes against to please raise their flag and abstains. So it's 15 for unanimous. We have 15 in attendance today, so it's unanimous.
Okay, that's good. So we have approved those amendments. So then we move on to the question about re-exposure.
So as per due process, when we approve a new standard, after we approve it, there's then an opportunity for any members who believe a vote on re-exposure is necessary to propose that to the board, if that's the case. So does anyone think there's a need to discuss re-exposure?
Okay, so I think that is fully approved. Okay, so thank you very much, everyone, for all the hard work that's gone into it. There has been a lot. It's a complicated set of amendments, and I think I think we have collectively put a lot of effort, but obviously huge thanks to staff and the task force for all the work that's gone in on our behalf. I think it's a good result. Important, to remember where we started off from, that we had approved IPSAS 46, but there was a strong desire that we actually really went through and worked out where COV could be a valuable additional tool across our literature, so that we maintain the integrity of our literature. And I think we've done that, subject to that one ongoing piece of work. We'll hear back on the proposed way forward when we've done the full analysis on that. But thank you very much, everyone. So I think that concludes on measurement. Nothing else that we need to bring back in terms of final pronouncements. Obviously, we had the agreement that we will consider that specific issue in terms of IPSAS 33 tomorrow. Andrew, you're hovering on something.
Sorry.
Oh, sorry.
Yes, just a discussion about effective date. Staff is proposing an effective date of January 1st, 2028. I do want to highlight that I did have a typo in the paper. IPSAS 46 is effective January 1st, 2025. So I wanted to clarify that, but the staff is proposing similar to the usual standard from the IPSASB perspective. We calculate 18 months from the publication of the standard. We're expecting to publish the standard in August. So 18 months will take you to February 2027, and therefore the proposal is to be January 1st, 2028. And with that, I will pass it to the board. Thank you.
And presumably with earlier adoption permitted.
Yes. Yes, just to highlight that, we do have 4 parts to the standard. Early adoption is allowed across the standard, and one of the things that the effective date paragraphs that were revised reflect that from a perspective basis. Thank you.
Okay. Agreed. Right. So, final step is basis for conclusions. I take it we're okay with that. So we have now concluded. Apologies for slightly short-circuiting the process there. Okay, so with that, I think we genuinely absolutely finished on. So let us move on then into presentation of financial statements. So thanks, Agustina and Alicia. So just give Eileen an opportunity just to get herself set up before we get going. Okay, so we start then the agenda item on presentation of financial statements. A lot of work that's gone into this through the task force over the last few months. So thank you very much, everyone, firstly, thanks to Eileen for a lot of work in the intervening period since we last discussed this in March, but thank you as well to the task force for all your efforts. So Eileen, to you to introduce the item.
Thank you, Chair. Definitely echo the thanks to the task force. We met once, but we also sent out a lot of things by email afterward. So we do appreciate the engagement. It definitely helped us to get to this robust set of papers. So definitely want to challenge the board a bit by giving you guys a really easy end of session for a really long week. So thanks very much for the patience. This set of papers is really trying to help us wrap up all of the presentation discussions relating to the statement of financial performance. Now, as members are aware, this statement has been a challenging area for discussion. It was where most of the changes were actually happening on the private sector as well, but we really did need to kind of take that step back, think about what categorization would mean for us in the public sector. Where do we really have room for improvement in what IPSAS 1 currently achieves and where we could be? And I think we had some really great discussions in December and in March, which really set us up well to actually take this forward in this Q2 period. And I think as members read the papers, it might have become pretty clear why we needed to land a preliminary view on categorization, as it did have a trickle impact on some of those other presentation considerations. So with that, the first paper I wanted to go into with the group today is the GFS paper. Now, this was a direct instruction coming out of the March session to help the board finalize its preliminary view on categorization. In March, we did a straw poll, I think, where we got a general sense of what members' views were. And there was a strong preference, I would say, a strong preference for the IFRS 18 categorization approach, but it was important that we comprehensively consider GFS as well so that we can include that analysis and the board's conclusion about that within the consultation paper. So with that, for those that know me, I read a lot before I like to do analysis. So it was pretty interesting to try to read through 400 pages of the GFSM 2014 manual. And so with that, I do want to say a big thank you to some of our colleagues, for example, at the IMF, that helped us to understand the GFS database. We did speak to Florian and a few other national standard setters. And I would be absolutely remiss not to say thank you to Joao as well. I definitely went to him with a whole list of, here's my understanding, here are my questions, do I understand this correctly, so that we can make sure that we are presenting a clear-cut analysis to the board as well, so that we can move this topic forward in the right way. So with that, I would say there's a very structured way in which we try to present this paper, because ultimately to consider categorization in a way that's aligned with GFSM 2014, we also need to be cognizant of those important differences that exist between the IPSAS standards and the GFSM framework. So ultimately, there are some differences between the intention of the guidance, the purpose of the frameworks, and what they try to achieve. And while both of them serve the public sector, and there is overlap in the types of users and entities that may use and prepare reports and statements using IPSAS and using GFSM, there are some notable differences in the definitions, how the statements are structured, the recognition, measurement, and therefore the presentation principles as a result of that. So those are highlighted in the paper, and I won't go too much into it in the session today, just to make sure we make good use of the plenary time. But those differences were really a really important part for us to consider as the staff and the task force were navigating this to consider, if we were to align with categorization in GFSM, what would that actually be like? So that takes me to the table on the right-hand side of this slide. The statement of operations for GFSM is not directly equivalent to the IPSAS statement of financial performance, and that is, again, partly because of the differences in the frameworks and how they consider the presentation of information. GFSM is really looking at changes in stock flows and the positions, which means the statement of operations only focuses on transactions, and transactions are defined in a very specific way in GFSM. Now, when we actually looked at the different sections that are in here, Section 1 of the GFSM Statement for Operations is similar but not identical or equivalent to our statement of financial performance. It does include revenues and expenses, but what qualifies as a revenue to be recognized in this statement under GFSM is not always the same as the revenue that's in our statement of financial performance. So there are differences in what actually comprises Section 1 of GFSM, and therefore there isn't a direct equivalency to the IPSAS statement of financial performance and the items that we have recognized in surplus or deficit. Now, GFSM also has two other sections in Statement of Operations. We actually don't have anything comparable in our Statement of Financial Performance, and that's because the GFSM transactions that are presented in Sections 2 and 3 are acquisitions, disposals. Those are the types of financial information that we actually show in other financial statements under IPSAS or even in the notes. And so because the IPSASB has already made the decision that we would not be relocating information and presenting it on different statements, as seen from the discussion we had on revenue and expenses outside of surplus or deficit, those two sections were not further considered in this analysis. So that then focused us on the transactions affecting net worth in GFSM and what we have in the statement of financial performance. And as mentioned, because the revenue and expenses are not directly equivalent in how you recognize, measure it under GFSM versus IPSAS, that posed a big challenge for us to say, well, when we are trying to align in the categorization, which is essentially the presentation under that section, GFSM would have revenues, and it's very specifically for revenue items because GFSM has very clear and specific rules on how you classify and therefore present your revenue items, and 8 expenses that are listed. They're not directly equivalent, and as a result, when we do try to match up that the presentation, it may actually create an illusion of alignment without actually aligning the substance of the amounts that are being reported within each of the line items on this statement. So that really did pose a major challenge for us because that would ultimately create more confusion potentially, and if anything, it may mislead the users of the financial statement if we were to align the presentation without actually achieving alignment in the substance of the accounting information that's being presented. Now, the other thing it would entail is actually a substantial change in the recognition and measurement principles in our IPSAS to be able to achieve that alignment. And so when the task force considered the analysis and thinking about what the IPSASB has actually already decided in terms of whether or not to take a GFSM aligned approach for the other statements, and to not relocate information between the statements, it seemed like it was not the right way forward. But what really mattered for us was to make sure that in the consultation paper, we document that accordingly, as it was one of the key drivers within the project brief that we stated about how we would develop this consultation paper and thinking about how to reduce some of the potential unnecessary differences that we have between GFSM and IPSAS. I think the analysis also really highlighted the importance of the IPSASB's current project on strengthening the linkage between GFSM and IPSAS, and that's really a lot through the non-authoritative work that Joao is putting together with his task force and looking at how we can create more, for example, reconciliation schedules and additional information to really support that bridging exercise to understand how information based on IPSAS can actually be leveraged to also build out GFSM reporting and to support GFS discussions as well. So all in all, I appreciate the paper had a lot of analysis there, but what it really led us to is the following 3 recommendations. The first is that the IPSASB present the considerations and its overall rationale for not aligning with the GFSM categorization in the Statement of Financial Performance in the consultation paper. But because some of the discussions to the statement are related to the wider, the broader understanding about the differences between GFSM and IPSAS, we felt it might be important to also include in an appendix just a short overview about the differences. And that is actually, I think, an area where staff want to take this away and work through a little bit more to modify the tone a bit more and to also more explicitly bring in that the linkage project that we have at the moment to show how ultimately we can't fix it on this project, but we are conducting work that will help with that connection between IPSAS and GFSM. That then leads us to finalizing the preliminary view in the consultation paper to essentially come back to where we were in March. We have addressed the instruction according to this paper, and we would like to hear member views on whether they are comfortable finalizing a preliminary view in the consultation paper to align with categorization like with IFRS 18, but with additional public sector guidance. With that, I'll pass it back to the chair. Thank you.
So thank you, Eileen, for that. And I think consistently with the way we approach this in March, what I'd like to do is open up for comments in terms of what's presented here and the thinking. And we will then have a second discussion in terms of, coming to a view on whether we express a preliminary view or not. Just a little bit more detail in terms of what's going on in terms of the IPSAS and GFSM project. That is complementary in that what it does is it's focusing on recognition and measurement issues and where there are similarities and where there are differences. We do have a task force including representatives from both IMF and Eurostat who've been involved in this over a long period. So what it's really doing is pulling together the accumulated knowledge and experience over that period. The task force we've had a briefing meeting. The task force will be meeting for a couple of days in Bern in Switzerland, and thank you very much to Florian for hosting us there. And the intention there is that, based on the preliminary discussions, we'll make sufficient progress that you can see drafting of that non-authoritative material to be added to IPSAS 22, and also the non-authoritative boxes to be added to the standards, so that you can see all of that. But it is very much focusing on really bottoming out the recognition and measurement side of things. What we're seeing here is the discussion in terms of where we might go, or not with the presentation side of things. And certainly in the presentation I did to the GFS Advisory Committee a few weeks back, I very much emphasised the importance of the work we were doing on recognition and measurement, and did allude to the challenges that we were having in terms of how this might move forward on presentation, because there was interest in that, but I think this is where this analysis becomes important. So with that update to you on what's going on that project, and as per Eileen's comment in finalising drafting, we need to make sure that, we keep the two in sync. Are there any comments in terms of either how the considerations have been presented or the addition of the appendix? And then, having had that discussion, we'll come back and discuss where members' views are. Okay, so open for comments on those first two recommendations. Karen, to you.
Thank you, Chair. I'll kick off. So I keep going around mentally myself on some of this stuff, and I think, as I said earlier on this week, I was really struck in terms of the CAG conversation about reminding us about the alignment in terms of data, versus the presentation, and I think that is really, really useful in there. And I could completely get, in terms of the arguments presented in this paper, that at an entity level, GFS alignment doesn't make a huge amount of sense. And I think I'm pleased to hear you talk about tone, because I think there's a balance in here that needs to be achieved that perhaps isn't quite there at the moment, particularly given that we sort of have as one of our objectives GFS alignment. It's the tone, as you say, in terms of it feels very can't do rather than can do in terms of nature. But on the can-do side of things, and as this is a consultation paper, I think is worth exploring. And it may be that it's a link with 22 rather than one is about the whole of government level and reconciliation points. So there may be that the numbers, have got a different basis, but the scope of the transactions is broadly similar, and you want to be able to explain why the number in an IPSAS-based set of accounts is different to what you get when you apply the GFS framework. I mean, I think we've heard constantly that, governments do use the GFS numbers in terms of talking about its financial performance. That might not be where we want to be, but that's kind of the reality of the world that we are in at the moment. And being able to give more credibility to the IPSAS-based numbers by showing how they relate to the national accounts numbers, I think is really important. So it might not be the primary objective of this, but I think it is useful to ask the question about whether there are reconciliation points that constituents would find useful, that we might be able to think about in terms of what ends up in IPSAS 1, or it may be food for thought that eventually gets picked up in IPSAS 2022. I understand the staff analysis. I think balance would be in if we can just slightly change the tone of it, but look to explore whether there are other potential benefits that could come out of this and capture the data as part of this consultation exercise. I did have a point on the categories. Do you want to do that separately?
Yeah, if we can do the categories separately. I mean, just sort of following on from what you said there, Karen, I think, clearly, obviously, you and I are very familiar with the example of how that information in terms of reconciling between the accrual-based whole of government numbers and the relevant metrics in terms of national statistics are presented as an annex to the whole of government accounts document. So it's outside the audited information, but it's still there, and it's presented for both the balance sheet and for the performance statement. Obviously there's also the model in terms of the Australian standard 1049 and so on. So I think, there are some options around that, and that's probably worthwhile exposing those on the way to where the board wants to recommend going. Okay, Angela.
Thank you, Chair, and I really just wanted to express my support for Karen's suggestion. I really like the way you phrased the project in your other hat around recognition and measurement. I think there's a really positive story there. But I liked the fact that as a public sector accounting standards board, we have the public sector difference and we also have presentation and disclosure, and it's a consultation paper. I think, like Karen, it may not end up as part of IPSAS 1, but I really support the idea of sort of floating the idea about what are the presentation sort of options, accepting the staff analysis that we can't, it makes sense. I agree with the staff recommendation on the categories, but I think Karen raises a very good point, and I would support that approach.
Thanks, Angela. Andrew.
So not too much else to add, just agreeing with the sentiment. I think in terms of the tone, I think it is a CP, so it does need to perhaps be a little bit more balanced in terms of options that are out there. I also just think that it is, to Karen's point, too much focused on the data. So what are the recognition and measurement differences, and therefore why a presentation can't work? Whereas I think we should just take that back a little bit, not focus too much on those differences, and more have a look at the presentation options, as you're saying, 1049, look at other things that it might not be a perfect alignment, but perhaps there is still something in there for different levels of government. Agreed, not for every entity, but differing levels there. And let's see what people think.
Okay, thanks, Andrew. I mean, I do think that point about the fact it is a consultation paper, and that using that option would help give that sort of more nuanced view that I think both Karen and Angela were looking for. And the other timing thing, I think, which might go to what Andrew was talking about there, is obviously subject to how the other project progresses, but certainly, hopefully, by that time, we would be at least have some proposals out there in the form of an exposure draft, even if it's not, we haven't quite finalised the additional guidance, non-authoritative guidance for IPSAS 22. So, we can draw on that rather than having a separate appendix with a lot of detail in it, perhaps, which I think would probably go to your suggestion there, Andrew. Other comments from members? Oh, Murray, sorry, your flag was behind your laptop.
Thank you. I have a similar view, and so considering about the relationship between the JFS and now we are considering about the presentation of the financial statement. However, we have to consider about the RPG1, fiscal sustainability long term, and so it can be it's possible to insert and consider the JFM's so important objectives to analyze and evaluating fiscal policy, and so maybe RPG 1 paragraph maybe 27. The important line item is revenue and debt and service, and so we have to include such kind of conception into the also not only also the presentation of financial statements. Thank you.
Thanks, Murray. I think that that would be very helpful. I think if we give staff an instruction to work out how and where we get that discussion in, and it probably is a good time to actually raise it, given our discussions elsewhere about sustainability reporting, so that we take a joined up view on this. So thanks for that comment. Other thoughts? Okay, so I think then in terms of you've heard the sort of instructions from members in terms of how we can finesse the drafting. You want to come back on that, Eileen?
Yeah, just to clarify how to execute, because this is my first CP. So I recognize that we have preliminary review options, but we also have SMC. So I know some of this is obviously updating the appendix and how we have the tone and the context in that appendix. And I've already gotten some helpful feedback on how we might be able to adjust that tone.
Well, I think
but
we probably need to come back and reflect on whether we need an appendix,
Okay.
bearing in mind, because I think, again, that's part of that tone thing, that we will have already had an ED out there which focuses on the recognition and measurement issues. So that then changes the content that we need here. And I think there's also a balance point in terms of how much we need that, bearing in mind the overall thrust here. So I think that's, something to reflect on in terms of getting
I
back
agree.
and implementation.
Yeah, and we can definitely talk about the appendix further because the task force did have some other thoughts about the appendix itself, but we can get to that in paper 6. But in terms of, Karen, your comment about, asking for a bit more feedback about what kind of information they may want to see on the presentation side, is that typically like an SMC, or is it more just general kind of description and discussion we would like to include in chapter 4? I just wanted to clarify if there was already a view on what members would prefer for that. Thank you.
Well, I would suggest that we reflect on whether we need an SMC or not. I think that, we always go backwards and forwards on CPs about preliminary reviews, whether we have an SMC as well as a preliminary review and that kind of thing. And I think actually we need staff to reflect on that. I think it's perfectly possible in constructing the CP that whilst there is an overall conclusion that and we're going to come to this, if the conclusion from the board is actually to recommend, aligning with IFRS 18, that still doesn't preclude other information being included. And I think that's where there may be a more open discussion that's necessary to have. I don't think at this stage we should have this discussion backwards and forwards within the board, because there will be shades of views, and it's going to be something that we need to see the drafting on. But I think if you go in that direction, that will take us to a preliminary view, whilst also allowing the openness in terms of, yes, we've looked at the presentation, and therefore we come to this view, but there are other options that need to be, and we would like, which then might lead you to an SMC. Angela.
Thank you, Chair. And Eileen, I just wanted to say how much I appreciated the analysis and the evidence base. So often we sit around going, well, we think this and we think that, but we don't see the evidence. And I just wanted to say that how we communicate, which I think is what the Chair's talking about, to foster really good sort of ideas from constituents may be different. I can see this material being really useful for a number of projects. And just having that evidence base is certainly a fantastic resource. So I just wanted to say how much I appreciated the work, because I'm from a jurisdiction that's I'm personally not as familiar with the statistical framework, so I really appreciated the level of analysis. But I guess, yeah, you need to reflect on the comms as a group, and it is a new idea today. I think it's a very good idea, but yeah, we need to develop it up from a comms perspective. But thank you very much.
Thanks. Karen, final comment on this, because I think I want to start
I just completely agree with Angela. I think we need to join up on the comms. I think there's a really positive story to tell about GFS alignment across the piece, and we need to bring those threads together so that people can see that we are, if you like, faithful to the objective, even though there are challenges for this particular paper.
That's a good summary. So, if you like, with that shape in terms of how we might approach this, I think that does start to move us then into the preliminary view. And obviously we sort of got into discussing this in March, and I think we had an indication of where members' views were going at that stage. But actually now I think it's worthwhile looking at whether members are content with the proposed preliminary view, because I think that's important then in settling that drafting down within the actual chapter. So I think, maybe we'll just take some preliminary comments just in terms of members indicating, any particular factors that have swayed them one way or the other, and then we'll just look at a show of hands in terms of whether the board are content with expressing a preliminary view. Karen.
Thank you, Chair. So last time round I sat on the fence because I wanted to see the GFS analysis. So I'm much more comfortable in terms of the direction around the alignment with the IFRS 18 categories. I think the one area that I think may be worth exploring a bit more is around taxation. Because taxation feels to me to be a different type of transaction than exists in the for-profit sector. And I've been thinking about whether it really is revenue in the way in which it's considered in the for-profit context, because it's, if you like, it's not self-generated, which it generally is, not exclusively, but generally is in the for-profit sector. And for me, I kind of went through the thought process, well, actually, is it funding? Because it's a dial that governments can turn to decide whether they want more or less of it in terms of the rates of taxation that they put on citizens. So it's a mechanism that government has that for-profits don't have. So I wonder whether there've been consideration to whether it's funding, but if it's not funding, does it deserve its own category because it is different in the public sector context compared to the other categories? So that's the one thing that I've got left kind of standing in terms of that's public sector specific, that's different, and you know, where should it go in terms of categories, and does it need its own one?
Thanks, Karen. And it may well be different depending on whether you're talking about whole of government or individual entity as well. Okay, so useful to just sort of hold that caveat. You know, other members in terms of any changes in their thinking or factors that they think need further consideration since we discussed in March. Okay, I'm not seeing any additional flags raised, so I think we might just actually then go for a show of hands in terms of whether there is support for the proposed preliminary review to align with IFRS 18. So, Karen.
Check in terms of align with 18, my comments about taxation, how do they fit in?
So I think we will need to, I want to take them forward then into the discussion that we'll have about categories. So I think we note that that's subject to, if you like, that's fine. But with that caveat, our members content to support the preliminary review that we have. So can I have a show of hands for those members that would support the preliminary review?
Thirteen.
Okay, and those that would not support the preliminary review?
One.
And those that abstain?
One.
Okay, so I think, you know, that obviously does mean that as a board we have a majority in favour of the preliminary review. I think it does make it important then that in the way in which this is discussed, that the arguments that, you know, sway those, you know, Jonah in your case, Andrew in your case, I think it's important that we draw those out so that the discussion, the consultation paper does provide that balanced view. Yeah, you know, so we need to make sure that's appropriately reflected. And I think, though, overall tactically, I think from a board point of view, it's good to have a preliminary review because that will encourage, you know, comments from stakeholders. So, you know, we'll get views one way or the other. And that's really helpful then for the board in moving forward with the exposure draft. So I think that's good. So I think that gets us there on the item. And we know that we have Karen's caveat, which we are going to have to talk a little bit more about because it is an important factor as to whether that's revenue or funding, or it may be in certain contexts and so on. And I think that gets us into categories.
So Karen and I did have a discussion about that earlier this week, which I'm happy to share with members at this stage if it is helpful, because I think there are a few ways forward. When we had the conversation, it did kind of make me think about the discussion we had in March about public sector specific categories and whether or not we may be adjusted to be operating, non-operating, operating, investing, funding. And that was kind of where we thought, okay, well, if we wanted to create these different delineations to have different categories, would that give us a better public sector narrative? And this is kind of where that might fit in terms of taxes being a funding mechanism. Ultimately, I think one of the challenges we may run into is the same as, the understanding of, well, the categories seem like they align, but they don't quite. There's still differences, and some of those drawbacks that the members discussed during March may be an issue here as well. I think it's a good point to bring up in the CP, and my preliminary thinking is that we might be able to build in some of that into the discussion on public sector specific categorization to showcase that ultimately in the public sector, taxes are a little bit more unique. Yes, okay, you are getting that as revenue to fund the services and the activities that you're conducting as a government, but it is a little bit more nuanced. So I do think that might be a way forward, that we can update the drafting in the CP on the public sector specific categorization side to already kind of bring this part out. Ultimately for taxes, and to think about it from the broader perspective of international public sector entities don't always necessarily collect taxes. Governments definitely do. But this is, I think, where the general presentation principles kick in. So whether you have materiality, aggregation, disaggregation, and so if taxes are a really important revenue source for that entity, then that actually will help to make sure that it does appear within the presentation of items on the statement. So we'll take that away further. I'm not trying to close off that topic per se, but work that we can do, and that might be a way that we can take that forward.
Well, can I propose that this actually sits under the categorization of revenue and expenses? I think we need to have that discussion in that context, because it is about whether it's income or funding, or it can be a mixture of both depending on the nature of the activities. So, can we just have the conversation about categorization, and then we will come back to it, because I know there are examples where it's essentially treated as funding because of the nature of the organisation. So I would rather have the conversation about categories and get a general principle, and then we can come back, if that's okay. So I think that gives us the overall way forward on presentation. So now can we move on and talk about categories and have the discussion about that, and then we will come back and think about how does taxation fit in, to that, if that's okay. But I agree it's important, but I would rather get the general principles right, and then we'll come back and have a look at categories. So if you want to move us then into item 11.2.2.
Agenda item 11.2.2 is doing a bit of a deep dive, I would say, into how IFRS 18 presents different guidance regarding categorization. So I think as members saw from the paper, it is important for us to first talk about that, broad agreement with taking the categorization approach as presented in IFRS 18. But the next step under IFRS 18 is actually to say, well, there might be certain situations where if you as an entity are conducting your operations in a certain way, you're conducting what they call specific main business activities, that might actually warrant you categorizing certain revenue and expense items in a different manner. And part of that is because the way that the IASB had developed the IFRS 18 is almost like a funneling impact, where you know that you have categories, but you're actually thinking first about, well, does this revenue or an expense item, income or expense in the private sector, is that financing? Does it meet the rules for financing? No. Okay, well, what about investing? No. Okay, well then, that's kind of how they flow through. And ultimately, the operating category is almost like a catch-all within that sector. And that is really meant to showcase that ultimately, private sector entities, public sector entities, there are a broad range of activities that are being conducted that are part of the operations. And so being able to present the revenue and expenses in the operating category will actually better support users in considering those key metrics to understand the operations and whether or not they're operating effectively. Now, in that case, that means that certain entities that conduct, say, investing in assets or providing financing to customers, if they followed that criteria as it's currently set out in the IFRS 18 categorization guidance, they might end up categorizing certain income and expenses into financing or investing that doesn't actually properly represent the purpose. So a really good example in the private sector is banking. So they're obviously providing funding to customers, but as a bank, that is their operation. So that is a really key part that gets moved. So it was really helpful to understand at least what the intention is on the private sector side, because now to consider how we bring this in for the public sector, we can now think more about, well, do public sector entities also do these types of specific main business activities, investing in assets and providing financing. And so from the analysis that the staff and the task force went through this quarter, our conclusion to that kind of first question is yes, actually, public sector entities do actually engage in these types of activities. And we have a few examples listed here on the slide. The papers provide a lot more of the details and analysis that I don't want to go into now to make sure we give good plenary time to members. But this really did showcase to us that it can be quite prevalent in the international public sector, and therefore that type of guidance could be relevant for us as well. So then the second question we had was essentially, well, if we're saying that the public sector does also sometimes provide these specified main business activities, then would similar guidance like we're seeing in IFRS 18 also be useful for us in the public sector? And the task force had concluded that yes, it definitely would be, because ultimately having this guidance in would actually make sure that entities are appropriately representing their revenue and expenses to actually reflect their operations in the reporting period to achieve their service delivery objectives. And that way, they're actually providing a lot more useful information to the users of their financial statements. Now, if we didn't bring in this guidance, what could that mean? The task force agreed that there would actually be substantial risk if we do that, because you're not going to be able to properly reflect the purpose of those underlying transactions, and that might lead to less useful information. You're not supporting the users of the financial statements as well, and that would actually be against the intention of what we're trying to achieve with this project in reassessing and considering presentation requirements. So the last question that we pitched in this analysis is, well, okay, if we say that IFRS 18 guidance is useful, how could we actually adapt that to be useful in the public sector? And so through that discussion, the task force said that, well, first of all, we definitely need to change the term. Main business activities doesn't quite work in the public sector. The task force felt that main operating activities was actually a good and broad term that could work in many instances. And of course, there are changes to public sector terminology that we typically make in all of our standards when we are adapting IFRS. The last, which I think is a good one to kind of collect feedback on, is adding public sector examples. As I think is already showcased in the discussion on taxes, there are different nuances in the public sector and how you may think about certain items. So it's not even just about the examples that we saw in that last table about, as a government, if you have a pension fund and but also thinking about some of these other considerations in categorizing the revenue and expenses. So with that, the recommendations, and because we didn't know where we would land with the PV, we framed it this way. But now that the IPSASB has decided, as a majority at least, to take the preliminary view to align with IFRS 18 categories, then staff and task force proposal is that we also incorporate IFRS 18 guidance regarding main business activities, but with the proposed adaptations that have been presented in the paper. The last is to just reflect that in the CP.
Thanks, Eileen. Ross, you wanted to come in?
Yeah, just wanted to come in quickly before the discussion, just to commend Eileen and the task force for a really good analysis and paper on this. Having been part of some of the previous breakout discussions on this and the challenges around this, I really found, and I wasn't involved in this paper directly, when I read this, I finally got a good understanding of why IFRS 18 was structured the way it was, and really the principles and the thinking behind it, which really helped me with where we're going on this in a way that it hadn't before. And I think the task force, with Eileen's great support, has done an excellent job on this paper in particular. They're all great, but this one really clarified it for me in a way that I think we'd been lacking. So good job.
Thanks, Ross. Yes, I think endorse that. Very thorough set of papers. So if we can sort of just open up then in terms of members' general, views on the approach considered, noting that we will have those clear, public sector example where we will need to give further consideration to, how to approach taxation, in terms of the substance of what it is, and also in terms of the fact that it can be different in nature, or it could be different in nature, depending on individual entity versus whole of government, etc. But if we can just have the discussion about the general principle in terms of are we content then with the proposal to pick up the IFRS 18 categories. So open for comments. I was waiting for Claudia, she was hovering, and then Patricia, you came in first, so go for it, Patricia.
I agree with about the quality of the paper. It's very helpful. And in general, I think you can apply this categorization, but you have to consider the specificity of the public sector. But I would like to understand how the staff and the task force analyze the fact that an asset is held for financial capacity can generate revenue, expense, categorized as operating activities. I think this is my main, because it's not only about to held for operational capacity or held for financial capacity, it's about measurement too, and the impact on the performance too. Then I would like to understand better.
Thanks, Patricia. And I think that does shine a light on what may be much more of a difference in the public sector, depending, as you say, on the approach that's been taken in terms of measurement. Because clearly, if a jurisdiction is actually using much more by way of current value measurement rather than historical cost measurement, particularly if they're using COV, then needing to be more clear about the impacts and how that's coming through, then that's clearly that context that we need to think about, and we should be more explicit, because, as you say, it's the counterpart to the work we've done on IPSASB 46. So I think that's probably an instruction there to then work out exactly how that plays in with the discussion in the CP. I think, we can log that, but that's something that needs to be reflected, but leave staff and task force just to work out where exactly that should come through and how we bring that out. Claudia.
So thanks to Patricia and you have already made one of my points, so I fully agree. And I'll just remind, without this concept of main operating activities, we can't follow or structure in categorization, operating, investing, financing. It wouldn't work. So they are combined in my mind. Otherwise, it didn't make sense at all. So, and if we make clear what this categorization means in the public sector, specific activities, services, then it much more get more flavor in our discussion as best for that we make the right professional judgment. At the end, there will be a lot of professional judgment. What is really the main operating activity of their entity and whatnot.
Thanks, Claudia. So that sort of points up perhaps that we're looking more at how we implement the overall approach and making sure that there's the right guidance rather than adapting. And that's probably quite an important point, in terms of what we're actually doing here. Further comments from members? Okay, so in terms of therefore, noting that there would need to be additional guidance on implementation, which addressed Patricia's point on what is operating, what is financing, and very much making the link into the measurement side of things. And I think that's consistent with Claudia's point. We would also need to think about taxation revenue and where that can potentially sit. But then can I ask members for views then on, are we still content that the overall categories can be interpreted for the public sector? So can I ask for a show of hands on that? Those that would support moving forward on that basis, that we use the categories, but we provide appropriate interpretation guidance to address the public sector context. Those in favour?
So just noting, we can't see the members online right now.
Oh, okay. So we probably need to ask the members.
Members online have their hands up, we were just told.
So I counted 12 in the room, 2 online, so that's 14.
Okay, thank you. And just to confirm then, those against?
1 against, and we have 15 in attendance today, so that's
Okay.
the full board.
Okay, so I think, you know, again, we need to make sure that, you know, the contrary perspective is appropriately described in the consultation paper. You know, and it's a balance in terms of how we do this with the CP. It's not a formal dissenting view. It's just actually making sure that we have, you know, exposed the arguments, and therefore on balance, what is the preliminary view of the board. And then we will need to do some further work on those aspects of interpretation. And I think we will need to do something specific then in the context of tax revenue, because that is an important consideration, and we will likely want to have comments on that. Camilla, you're back. Good to see you. I think we managed to log Camilla's vote though. Ross?
Maybe I'll just ask specifically for Yoon and Camilla to confirm whether they supported the motion or not. Since we couldn't see it, I'm getting conflicting advice on this one. I just don't see Yoon back online, so, but Camilla, maybe if you could confirm.
Sure.
Yes, I confirm. Thanks.
Okay. And I think we'll note Yoon as an abstention if she doesn't come back online
if we
and confirm.
if we can get her back online, then we'll, or if she wants to email, that I think would be, there you are, Yoon. We just wanted to check
I'm sorry.
you support. Okay, that's
Thank
helpful.
you. Sorry.
Okay. Good. Okay, so I think that support for the overall direction, but important to reflect the arguments both ways. And then in terms of that, we are going to need to provide supporting material on the proposed, you know, interpretations or, you know, additional guidance for public sector. Okay. So move us on then.
Thank you. So paper 3 is about presentation of totals and subtotals. We originally presented a detailed analysis about this in December, and I think as we started getting into the discussion, we realized we needed to take a step back, and we couldn't talk about totals and subtotals yet. Now, given where we have gotten to in the last 6 months and the discussions on categorization, this felt like an appropriate time to bring it back. Now, IPSAS 1 currently only requires the presentation of surplus or deficit, so one final total on this statement. And it does permit any additional subtotals if the entity believes that it is useful for the users, but it doesn't really provide a lot of specific guidance on it. It's really letting the entity make its own assessment. But there is an opportunity here now that we are adding in categorization to also add in some more subtotals as well as requirements. This would really complement the decision to also categorize the information. It adds more structure, and it really does help users to better understand the information because that creates a new starting point essentially by having those subtotals available. Now, given the decision at this stage, or I should say preliminary review at this stage to have operating, investing, financing as in IFRS 18, we were thinking about how these subtotals might match up to that new kind of categorization. And as the paper presents, our view is that surplus and deficit, you should definitely still continue to have. It's an important total on this statement of financial performance, and it is essentially unchanged from previous. But we are proposing to include new subtotals, specifically operating surplus or deficit, which is essentially the net total of income, revenue and expenses within the operating category, and then also an additional subtotal for surplus or deficit before financing, which is essentially the accumulation of what's in operating and investing before then deducting the element of revenue or expenses from the financing perspective to reach your surplus and total deficit. Overall, we feel that these subtotals and the final total would provide good starting points for analysis, would complement the categorization decision that we have made, and it would support users in better assessing the overall performance of the public sector entity that is reporting on that statement. The one thing we did also want to continue to include, to offer, is the IPSAS 1 requirement to permit the preparers to also include any other subtotals they deem useful. But I think what we found really helpful in the IFRS 18 guidance that we think we should adapt for the public sector as well is a little bit more detailed or description about what qualifies as a good subtotal to include. So specifically, is it going to actually provide useful information? Is it comparable? Is it based on information that's actually generated by IPSAS standards and guidance? And to make sure that it's not displayed in a way that's more prominent than any of the totals or subtotals that this future IPSAS would actually require. So it would be, I would say, enhancing some of the guidance that's there. And so overall, the recommendation from staff is to continue requiring the surplus or deficit total, adding in 2 new subtotals, so the operating surplus or deficit and surplus or deficit before financing, continue permitting additional subtotals, and then to also present a preliminary review regarding this assessment. Thank you, Chair.
Thanks, Eileen. I think that's very clear, and I think actually that then shows the importance of Karen's earlier comments in terms of what the nature of taxation is, and you know, the discussion we will need about how it might be treated for different types of entities. But thank you very much for that introduction. I will now open for comments on this one. Angela, lead us off, and then Claudia. I wasn't surprised. I thought we'd get some. Go for it.
No, thanks, Chair, and thanks, Eileen. I just wanted to, well, let me start with supporting the recommendation, and the flexibility, I think, is very important in some ways, although you don't want a financial statement so crowded with many subtotals that it becomes, you know, cluttered. But we were having an interesting conversation earlier this week about long-dated liabilities of governments and present value calculations and volatility. And I am pleased, in, as I understand it, that the discount rate impact is for present value calculations, which could be long dated, you know, 50 years plus, is going through financing, because I think from a communication point of view, the volatility of those discount rates changing on a very long dated liability can be so material. I like the fact that that would be in financing, and I can see in financing there's all these long dated liabilities moving with the valuation of an interest rate change, which is quite different from the actual finance expense of government bonds. So whether you'd have a subtotal, I don't know, but those things can be quite material and kind of slightly different in nature. The only other thing I reflect on is in those long-dated liabilities, not only is the interest rate the present value, but you can get quite significant remeasurement changes because basically you're estimating potentially cash flows of 50 years, and small changes like changes in the inflation assumption or changes in expectation of whatever the particular issue is. And I guess that sort of, I'll call it an actuarial gain or loss, because it's often actuaries that determine these underlying cash flows. I guess there could be some quite large movements year on year just from a change in a small assumption, which is not discount rate. And I guess that will end up in operating surplus or deficit, I'm thinking. So again, it's back to the volatility communication. So I guess that's just a live example in my head that sort of supports the need for some ability to sort of tell that story, whether it leads to subtotals or more explanations. But I am conscious, I suspect maybe users might be looking for that operating surplus or deficit to be some kind of controllable number or some kind of trend number. And I think that that's always the danger, there might be a sense that this operating surplus is controllable by ministers or governments, or when in fact it could be incredibly volatile for a few items by nature. So I guess it was just a reflection of an earlier conversation, a really live issue, particularly at the whole of government level, I think, where you can get such huge volatile swings and very long dated liabilities.
Thanks, Angela. Yeah, I think it's important, that distinction between whole of government and maybe entity, but, recognising that there may well be specialised types of reporting, for example, on pension plans and things like that. So there's a number of nuances there, and I think probably one of the challenges, and I think we need to get staff to go away and think about this, is the way in which we get the balance between, if you like, an overall IFRS 18 aligned approach and some of the public sector specifics like that, those big interest rate impacts of long dated liabilities, but also like taxation. So I think there's a number of kind of key aspects of this that we need to reflect on. Claudia.
Thank you. We have proposed two subtotals. One, operating surplus or deficit, have at least a reference to our conceptual framework. As is mentioned, that it gives us an understanding of the current level of revenues and whether it's sufficient to maintain the volume and quality of service we provided. That it's okay for me, but I'm really struggling with the subtotal surplus or deficit before financing, because what it is, in fact, it's earning before interest EBIT, earning before interest and tax, which is quite well known and used in the public sector and the private sector, but it's very rare and have the same idea of financial performance measuring in the public sector. If we request the subtotal, it could be the flavor that at least for government level, we expect that the government will be run in the same way like a private sector company. So I'm going more in the idea, if the subtotal could be more an optional or a preference. But I would really caution to request it for all of them because it really gives the wrong flavor. I think because EBIT have not that prominence in the public sector like in the private sector, operating surplus or deficit, it's fine, it's workable, but the other ones I really would leave to the organization. What is the proper subtotals for the relevant entities? Like Angela explained, there might be entities which have a different setup, so it could be misleading or something. So I'm really go for at least optional of subtotal surplus or deficit before financing.
Thanks, Claudia, for that nuance, if you like, in terms of how we approach this. And I think, you know, it might be worth actually just sort of stepping through this in terms of the recommendations, because we have the recommendation, the second recommendation here, which is we continue to require the surplus or a deficit total. And I think it would be worthwhile just checking on whether members are happy with that continued requirement. And then I might also just take views on operating surplus or deficit, because I think you indicated the proposal that yes, you're happy for that to be required. But then there's a question around surplus or deficit and financing and whether that is required or optional. So I think we just need to have some discussion about that. David, I don't know if you just want to come in on that, just in terms of the discussions that have already happened in the task force.
Well, we didn't really have much discussion on this in the task force. This is why the paper said the staff recommends, not staff and task force. I mean, I totally understand Claudia's comment. I mean, my understanding would be that an entity would use the subtotals that are appropriate to its circumstances, so that if it didn't have investment income or expenses, it wouldn't have that section. And again, if it didn't have financing in terms of what's discussed there, it wouldn't have that either. So if that's what the intention is, then it needs to be made clearer in the public sector guidance that you use the subtotals that are appropriate to your particular circumstances. That's my understanding anyway.
Okay, so I've got a couple of staff flags up, Dave and Ross, just before we get into this.
I think I just agree with what David just said. The board's agreed to have categories, and whichever categories they are. I don't know whether if the categories are already on the statement of operations, I don't know whether it makes a difference to take the subtotal off. I think the subtotal is useful, and I would strongly put forward support the staff recommendation that we continue to have it.
So just to clarify then, in IFRS 18, what is the status of those totals?
So in IFRS 18, I'll ask Eileen to come in case I get this wrong. IFRS 18 requires that you have your categories. I don't think it requires that you name them what the titles are, that they've just put them as illustrative. But if you have those categories, they require that you have a subtotal below them.
Okay. So that somewhat nuances the recommendation then, in terms of obviously I'm assuming that presenting the requiring a statement on surplus or deficit total at the bottom is not contentious, and that is an existing requirement. So then I think the revised, if you like, the proposal in accordance with IFRS 18 would be that whilst you use the categories, you don't necessarily need to use the subtotals, which is slightly different to what we've got there as a recommendation. I'll take comments at that point, because maybe I'm just muddying it rather than clarifying. Karen. and then Murray.
Thank you, Chair. In fact, I was trying to seek clarification as well, and clarification of what Claudia was saying. I agree with David, and I'm of the view that if another title for a subtotal needs to be used because it's more appropriate, as long as it's not misleading, then I'm okay with that. I just wanted to check with Claudia that you weren't suggesting that things move between categories. It was just the label on the subtotal, because that they're two different things. Sorry, I just wanted to check that.
I could also, I don't know if really it's should be required subtotal surplus or deficit for financing. Maybe it could be more helpful to have a subtotal investing and then maybe also for financing. Depends on how important it is. If I don't have important investments, I have only small, I still need a subtotal. That's a requirement. I can't, that's not really in what is relevant or not, I assume, and that means I will have subtotals in a financial statement which on which are not relevant, and at least if have this wrong flavor about this, we need all our public sector entities run on EBITs to make sure they will be run it like a private sector company. That's just the flavor it gives, and I'm not sure if it's really why we don't have a subtotal of total investing or together investing and financing. That's depending on the organization. I think they should decide which is the best subtotals for them.
Dave, you want to just come back in?
So I think, Claudia, they do. And I would use the word material. If you have material investments, you should have a category for investments and you should have a subtotal. If you don't have relevant or material investments, then you wouldn't have that category and you wouldn't present it. So I do think it's up to the organization to use their professional judgment to determine what is appropriate for their users to see on the financial statements.
Thanks for that clarification, Dave, and obviously that was consistent with the point that Andrew was going to make. Angela, you want to come in and then, Mari, and then Angela, and then Sunjin.
Thank you. I'm still in confusion, and I have a similar view with Claudia. And so the confusion, the cause of confusion is maybe the income and expense, the relationship of income and expense. It is in case of the private sector, it is a performance, and however, in the public sector, it is not no exchange transactions. And so maybe the tax revenue, other revenue, and wages, expenses, and the subtotal operating surplus deficit should lead to the misreading, to how to interpret, how to understand the subtotal meanings. So I'm so confusing. In the private sector, it is so the result of the business activities, and so it is so simple. However, in the public sector, it's quite different circumstances. Thank you.
Thanks, Mari. I mean, that certainly does bring up the question about line items and so on, but let's come back to that. I mean, I think, clearly what's emerging, and it's back to the point that Dave articulated, that, it's about what are the significant activities of that type of organisation. And probably to Mari's point, and I think this also goes with Karen's earlier point, one of the challenges we have is actually we probably have greater diversity in terms of types of different organisations. And I would certainly suggest, and I think we started to do this anyway following the discussion in Riyadh, is actually we started to look at different types of organisations. And so I think in actually putting this into the consultation paper, one of the things we will have to do is work out what are the key types of variance among public sector organisations, and then how does that fit with some of the description of some of the key differences that we're getting here. And I think, you know, if you like, in the discussions we've had this morning, we've had Karen's point about taxation and what is that. We've had Patricia's point about the fact that, you know, the operating financing situation may be more complicated because of the prevalence of current value and COV. We've had Mari's point about exchange, non-exchange. So there's, you know, we're collecting, if you like, a list of things that are, if you like, okay, we can apply the overall model, you know, in terms of the types of the, you know, the categories and so on, but they will manifest differently because of these public sector issues and also because of the type of organisation within the public sector. So, you know, there's probably going to need to be some more flexibility in terms of how we help constituents think about this. Angela, and then Sun-Jin.
Thanks, Chair. Just a clarification, really, from what Dave was saying, is applying the concept of materiality to the subtotal. So I think one of the points that Claudia, well, at least triggered in my mind, is if investment income, investment expense and interest costs up there are quite small, like 1-to-1, you might have operating surplus or deficit, and then you might just have investment income and interest expense and a surplus, so you don't have the middle subtotal. Or they may be very small items and you really just want everything up there and just surplus deficit. So that's a materiality judgment, not to clutter the thing with a lot of totals. So I just wanted to check whether that is permissible under IFRS 18, or as soon as you have those items, you must have those subtotals, even if they're tiny.
Thanks, Angela. Useful clarification. Eileen, do you want to go first? Dave?
From what I recollect of the IFRS 18 guidance, the answer would be yes, that you would still have it. And the way that the ISB has talked about how they're thinking about totals, subtotals, and categories is actually totals and subtotals were almost a starting point, actually. They were looking at this as more like, this is a good metric, it's a useful starting point, it helps with analysis. But to get to those subtotals, you have to categorize stuff in a way to actually get to those subtotals. So we have definitely been talking about this in a slightly different way because categorization is a much more complex area for the public sector. But that's also why when, you know, even in doing this analysis, we've been talking about totals and subtotals in complementing how the categorization occurs. Now, I think just listening to the member comments so far, I think there is obviously an indication that the narrative might not be as clear if we have it this way. Maybe it's a matter of how it's named, whether we give more flexibility about that, or if we are clear about subtotals being specific to categories rather than the aggregate. Because right now for IFRS 18, it's actually more about the aggregate. If you want to include additional subtotals for the specific categories, they're not stopping you. You can do that. But that might be where the flexibility kind of comes in. And then the public sector adaptation for us is actually having the subtotal by individual category, but only if material. And I think that might help us to kind of get to a balanced way forward in totals and subtotals. It's not exactly IFRS 18 to avoid the narrative issue, but still allows it to work together with the categorization requirements that we're introducing. So I just want to put that out there, but happy to hear member thoughts on that.
Okay, that's useful. Dave, did you want to come in and then I'll just take some further comments from members?
So I agree with everything Eileen said. I think that was really well summarized. The only point I wanted to make, and this goes back to maybe comments received throughout the day, is, and Eileen, jump in if I say anything correctly here, but IFRS 18, I don't think is as rigid as members are reading it. It's indicative of what the category should be. What they want on the statement of operations is for entities to present their operations or their activities in a way that's meaningful to users. So while they have indicated 3 categories, if you don't have those 3 categories, you don't use those three categories. You don't have to use those names. So we talked about taxation, we talked about funding. I just wanted to really highlight that it's not as rigid. I think it is applicable to public sector. There's lots of flexibility there. It's indicative to help entities understand what the expectation is, not a firm requirement on how the statements have to look.
Thanks, Dave. I think that's helpful. Ross, are you coming in before I go to the other members? Okay.
Just noting that we're also doing a CP here. So we have the ability to tell a bit of a story to help people understand. And we are developing a standard for the public sector. So we don't have to be completely rigid with IFRS 18. We can be clear on what we're thinking around the public sector. So the board has decided it wants categories and did decide it would have the flexibility that IFRS 18 has around categories. So I do think it's logical if you have the categories, you would have subtotals, but we could have a discussion in the CP around making sure that your categories and your subtotals are meaningful to your users and the richness of this actual debate to make sure people understand what this board's thinking about presentation.
And that might then lead you into having perhaps an annex or an appendix on sort of some specific types of transactions, which would go to the examples that we've already picked up, that would help you think that through. And that may well be a useful way to actually do it, such that, because I think we've got to think about, there are some complexities here. And so some of this is just actually the way we tell the story, and how we use the CP, because you do have to think that it's not, that's where, to your point, Eileen, it is difficult, it's different. And therefore there are some tactics about what you put in the main narrative and the supporting information you give. And it may well be that this goes back to the examples that we've collected of different types of organisations, because they illustrate those different types of situation that we've identified. So I think there's a bit more thinking to do around, firstly, what the implications of those actually are, and then how does that fit in with this discussion here. So I'm going to take just sort of comments from Sunjin, Jonah, and then Andrew, and then I think we might break for coffee at that point in time.
Thank you, Chair. Before giving my comment, I have to acknowledge that my view might be biased toward countries with 2 accounting systems. So Korea have cash-based budget accounting and accrual-based financial accounting. And one of the things we always have to deal with is, public servant or politicians know about budget accounting, so cash-based. But when they try to use financial statement information, cash-based numbers and financial statement numbers have to be somehow reconciled. From that point of view, I think the subtotals can be useful, highly useful, because numbers from cash flow statement and numbers from this operation statement, easy to compare. So this is based on accrual, this is based on cash flow. And because cash flows numbers would more closely align with budget accounting numbers. So not based on the preparer's point of view, but from user point of view, I think this subtotal can be highly useful.
Thanks, Sunjin. Jonah.
Yeah, I think this is the main difference that we have between GFS and IFRS 18, and I'm glad what Dave said, that this categorization is not cast in stone. You can be flexible about it. If that is the case, then probably I'll change my view. But the whole idea is that the presentation should reflect the public sector main objective of service delivery. not a financial return. Although the argument that people are saying that the surplus or deficit down there represents services that have been provided. But we think that the way IFRS 18 has been structured, those categorization, I personally think that they're more focused on a financial return rather than the service potential that the public sector is held accountable to. Yeah, thank you.
Thanks, Jenna. Andrew.
Thanks. I think what's really put my mind more at ease from our earlier discussion where I abstained around, 18 is the sort of discussion around what are the public sector nuances in using this sort of categorization? What are the particular examples? Where are we feeling uncomfortable? And we've had a couple of examples around the board table now around, well, does this go in operating investing? Do we straddle? Do we split? Do we use all of the different categories? And I almost feel that this should be the starting point of this chapter of the CP, where we actually explore and say, well, let's look at the landscape. Let's look at what are the uses, what are the public sector specific issues that are around the performance reporting. And then go into, well, we could be using an 18, we could be using something completely public sector specific, GFS, for example, and then flesh it out from there. And it might just be a personal preference, but I find the current one where we sort of start with, okay, we've got 18 GFS, etc., and then how do we adapt it? It jarred with me, and it's sort of that's why I voted in the way I did. But I feel if we start this way, we may get better responses from individuals, because you start with kind of what's the problem, what is your need? These are the tools we have that we could help you try and address that, and therefore this is the board's preliminary view. I just think it gets a better flow and may even sway me to change the way I did vote early on that preliminary view.
Thanks, Andrew. So I think that's helpful in terms of thinking it in that way, because I agree with you that clearly we need to reflect the diversity of public sector organisations, and I think undeniably there is a very great variety, and that therefore you have some of the you have the differences that we've picked up today, and that then would drive differences. And I think what we're picking up is actually we don't really see those driving particularly differences in the balance sheet presentation. Sorry, old language. But we do see it requiring more nuanced and different approaches on the performance statement, and what is right will be driven by materiality. And therefore, actually, what that does do is it doesn't say that the categories are wrong, but the categories will manifest differently. What's in the categories may well change depending on the nature of the. So that's actually a kind of, and therefore, you're right. Then we just need to reflect on actually what's the positioning. Is that in the performance, or is it even earlier in the, because we have picked up this idea about we need some just sort of stylized different types of organisations, differences between consolidated, single entity, and so on. So I think there is a kind of opportunity at this stage, shall we say, to look at the positioning of that material. I think you've got a lot of the right material already, Eileen, but it may well be that that might be just a different context piece or whatever, which then sets it up in the way that then gets us into the discussion that we're talking about here. And, then I think we would need to see, clearly as staff have indicated, there is that greater flexibility within IFRS 18. So we're not departing from it, but actually we're saying there are differences in the way that you use those tools for the public sector. I might just take a comment from Dave and a final comment from Renee before we break.
Just that I like the suggestion that Andrew made, and Ian, obviously you're echoing that. I think it's a nice way to bring in the discussion from today and members' concerns up front, and then here are some solutions on the way forward.
Thanks, Dave. Renee.
Yes, the way that Eileen wrote the paper and framed the objective of the IASB in their approach for IFRS 18 hasn't really come out, I think, in our deliberation so far, and I want to check in. I think that, and I agree that it's in the public sector, investing, financing, a bit of both, not a whole lot of either. There's different scenarios. But I think when I read your paper, Eileen, the IASB's objective is to tightly define and consistently define in a comparable way operating activities and operating surpluses. And that's why it's important to define what are the key business activity of the entity, because if it's the key business activity, it should be categorized as operating. So far, yes, okay, so I'm just checking in to make sure that so far. So I think in the public sector, it's also very important that we consistently define that operating category and through the key business activities. And then what's left is the IASB decided that they wanted investing and financing to also be explicitly defined as additional categories, but maybe in the public sector, explicitly defining those two, there should be more flexibility, as we said so far. So I'm not saying anything different, I think. I'm just trying to maybe just tease out the fact that one of the main objectives here is to make sure that if it's a main business activity, it's showing up in the operating surplus. And if we frame it that way, it could help. It's a thought.
Yeah, thanks, Renee. I think you kind of highlighted how the analysis in this paper really does tie into the analysis that we've seen on the categorization, the main operating activities, all that, because ultimately the presentation requirements will have to make sure everything works together. So if we are, I know we don't right now have an IED because we didn't have a preliminary view on this piece yet, but the guidance would essentially prompt you to first categorize these revenue and expenses to say, is it an operating category item? Is it investing? Is it financing? And it's slightly different from activities, but they're really thinking about it more in terms of what is the underlying transaction from which you're generating the revenue and expense. Once you've categorized, these subtotals are essentially a way of summarizing the overall amounts. Now, the flexibility that Dave was referring to is actually about the almost like the label, if you will, because IFRS doesn't actually require you to label each section as operating, investing, financing. You can not have a label, you can choose your own, but the intention is that you're separating the pieces of information into different sections on the statement, so they are separately identifiable from each other, so that they can assess them separately, and the subtotals really support in understanding what is the aggregate of, essentially this operating piece is a really key part. Now, on the public sector side, like we have seen a lot of different examples of statements, and I would say many public sector entities do seem to prepare operating revenue, operating expense, and then provide a subtotal for that. That is what that entity believes is useful for its users. So that kind of goes to the flexibility that Claudia is referring to, and that we want to continue highlighting here is we permit additional subtotals because ultimately every entity might have slight differences in what they're going to find useful for their user as a starting point for their analysis, and to showcase, have I or have I not as an entity achieved the service delivery outcomes or objectives that I had aimed to do on these different programs, services, activities, etc. So that flexibility is there in that perspective. And that's, I think, why IFRS 18 also sets those kind of minimum requirements, but it is more than what IS1 had because they're trying to bring in greater comparability and structure into the format of that statement. I'm not sure if that helps to kind of clarify, but it really is trying to all work together.
Yeah, I mean, I think in setting this up in the way that, Andrew was describing, I think we have to reflect on the fact that whereas the IASB was looking at this from a capital markets perspective and therefore looking for comparability internationally, we have to reflect the fact that public sector there are different types of bodies and it is organised differently in jurisdictions, and therefore comparability other than at whole of government level, is actually going to be driven by the nature of organisations and, whether that sector is, homogeneous, and therefore you can compare between, let's say, hospitals or schools or whatever, or whether you're at whole of government sector level, where there is going to be much more comparability between governments. Otherwise, it's going to be within regions or types of organisation within a government. So we've got to get that difference, and that will drive the differences that we've been talking about. So I think, and I want to summarise and conclude now. So I think, we do need to get that drafting, or position the drafting, because I know we've already got drafting on this in the right place in the CP, such that it's going to drive the discussion. And so far where we've got to is that these differences don't actually drive us down a different route in terms of the statement of financial position, but they do actually drive differences in terms of what's appropriate for the statement of financial performance. Now, that doesn't mean that you can't use the categories, but it does mean that the subtotals, there will be some nuances in terms of what is the subtotal called and so on. So that's what we've got to get into the into the paper, and I think that may, we'll need to see that back in terms of what that means by way of a preliminary view in this area, because I think what's come out of this discussion is, whilst okay, overall surplus and deficit, which is a requirement, should continue to be a requirement, but there's going to need to be more subtlety in terms of the other totals and their relevance, again going back to materiality. So I think that's been a very helpful discussion on that. I think it's flushed out quite a lot, and I think, the hard bit about CPs is always how you actually tell the story, because it is telling the story. But I think that helps us, and we will need to pick up through those different types of organisation, those subtleties about revenue and so on. Now, Angela, I know your flag is up, but I really do want to break. We're 10 minutes over. So very quickly.
Very quick. It's just in the summary and process. Karen's point on the taxation is that, have we dealt with that, or?
Yeah, we will explicitly need, because this comes into the different types.
I just wanted to check whether we were going to discuss it further between funding. No, it's just a process question.
We're going to need to see the drafting, then we will come back and see whether that reflects people's views. I don't want to have a theoretical debate. I think we need to see drafting on this, because I think the drafting will actually make sense of the discussion if we do it right. Okay, so time for caffeine or whatever your fix is. So we will take a break for 20 minutes and back here at 11 Toronto time. Thank you. Okay, in terms of useful discussion, I think before coffee, and we will come back later on just to reflect as we walk through the draft CP as it exists at the moment. Any sort of additional comments on where material sits and so on. But there's a couple of items we want to get through before then. So Eileen, to you on presentation and minimum line items.
Thank you, Chair. So paper 1124 and 1125 are related to a kind of same subsection, if you will, of the guidance in IPSAS 1 as well as in IFRS 18. But we felt it was more useful after our discussion with the task force to actually break this into two separate papers. So this first paper, 1124, is related to the minimum requirements of what are essentially the minimum line items that you should present on your statement of financial performance. Now, IPSAS 1 just essentially lists out a few specific things, and it also permits the additional line items that an entity deems to be material for its users and are still faithfully representative of the information that they are providing. And I think the materiality element is really what brings certain items onto the statement versus not, and that's very specific to the entity. Now, this paper essentially goes through what the IPSAS 1 requirements are, but also what IFRS 18 requirements are. And if we are going to be aligning with the categorization requirements in IFRS 18, then it was also worth considering what that would mean for us if we were to bring that in as well. Now, based on the research and discussions that the staff and the task force had during this quarter, we did note that just from the preliminary feedback we have received from public sector entities, it does seem like essentially taking the approach to set minimum line requirements in IPSAS 1 is still working pretty effectively. Ultimately, entities can then assess their own transactions in their reporting period to understand what they consider as material items to present, and also to follow, of course, with the minimum line requirements that are within IPSAS. So that could include, for example, financing costs, impairment, because they are important pieces of information that the IPSAS determined from setting its other standards. So there is definitely an interrelation between the IPSASB's work on the presentation requirements here, as well as its requirements within the other standards. Now, there hasn't really been much noise that we have heard at this stage from any entities saying that this is not working. And so, in the age-old saying of don't fix what's not broken, I think that really kind of pushed us to say, well, if we were to do anything, it needs to really enhance the requirements in some way rather than reinventing the wheel. So what the task force and the staff landed on is that because it is working in practice, it's operating effectively, the preparers, the auditors are essentially kind of keeping each other in check about what is considered material and therefore needs to be presented on the statements. What it really meant for us at this stage is actually making sure that we still continuing allow the flexibility because it's worked well for users the preparers in the past to consider their own reporting period and the transactions, but to really reframe the guidance now in the context of the new guidance we have under categorizations and in line with some of the requirements that we would be introducing by aligning with IFRS 18 requirements. So there definitely is a bit of a tweak in that perspective, but essentially what this proposal is that it would retain the IPSAS 1 requirements, but with slight enhancements and additions to make sure that it is still fit for purpose with the other, I would say, changes, if you will, with the presentation requirements we have. So with that, the recommendations are listed here to continue requiring, permitting additional, aligning with some of the guidance, but with public sector adjustments and presenting the PV. Over to you, Chair.
Thanks, Eileen. I think that's very clear. So just to open up for comments on that proposal. Karen, go for it.
So just I think I don't disagree with that at all. I support the information, as you say. If it's not broke, don't fix it. I just had a couple of questions about application of it, and one sort of ties into the next question about what happens if you have a functional presentation, if you've got these minimum line items, and a question about whether they're required to be disclosed, but does it need to be on the face of the statement if it's functional? And the second one is, are we, reflecting on the conversation before the coffee break though, but in terms of the categories, are we going to indicate which categories we would expect these line items to be in, or are we just leaving it completely open? Thank you.
Thanks, Karen. I mean, we might want to come back to the nature or function a bit later, but Eileen, any sort of immediate reactions, or Dave?
So I don't think we're leaving it, well, I guess it goes back to rigidity of the standard. We're not leaving it completely open. We would say it'd be up to the entity to decide where the individual captions or line items fit within each of the categories. So they'd have to decide whether it's their operating or whether their business model is different and it's down in financing. But we'd provide guidance indicating where things would go, but not be requiring where they go.
Okay, thanks. So I think, again, that probably comes into, actually, it's going to be quite interesting, the interplay between the illustrative exposure draft and actually the discussion in the CP, because I think that will, if we get the discussion in the CP right, then it provides that context. So any other comments about the proposal? So I'm not seeing any flags up, so I think we're supportive of the approach you're proposing there, Eileen. And obviously there's those couple of comments that Karen raised, which we would need to address, although I suspect the nature versus function must exist already as a tension. So, but that probably moves us quite neatly on.
Yeah, I agree, Chair. And so Karen, bear with me when I get through the presentation, and then I'm going to get to this point, because I do think it actually ties quite neatly to some of the deliberations we had at the task force about this as well. This paper went through, I think, 3 iterations, so thanks to the task force for bearing with that. So the second grouping, if you will, of guidance regarding the presentation of line items is specific to the presentation expenses. And so under IPSAS 1 at the moment, we have some guidance, but I wouldn't say it's a lot of guidance. We provide a choice between whether you present the expenses by the nature of the expense or by function of that expense to the entity. And there's, a few, I would say, examples, which is a little different from how we set standards now, but they essentially show to you that if you were to present by nature, this is kind of how it would look like. And then another to say, if you present by function, this is how it could look like. There is some general wording to essentially say, consider XYZ factors, such as, the type of entity you are and your jurisdiction in making the assessment. And so that obviously has been out for quite some time. Now, the intention is that users reading IPSAS 1 and applying this guidance and thinking about what choice they would have, they would consider those criteria, and ultimately it's for the purposes of ensuring that the information they then provide, how they're presenting those expenses on the statement, are in a faithfully representative way that's actually going to be more relevant for the users in understanding the actual expenditures that the entity has incurred. Now, I think in practice, having the 2 options, it has clearly shown that there are different merits. There is practical benefits to doing it by nature or doing it by function. And jurisdictions around the world have, of course, also sometimes taken IPSAS as is, but also maybe adapted it for their own jurisdiction. So it's quite a broad landscape in that sense. So we leveraged a lot of the examples that we had seen in prior periods of the work on this consultation paper. We also try to dig in a little bit more to understand some of the differences in certain jurisdictions, because what we saw was that nature is definitely a much more common choice, which I think is maybe part of the reason, to your point, Karen, like this kind of interface of if you present by function, but then you've got these line items that require specific nature, if you will, like how does that actually relate? So I don't think that's come up as much because there is a prevalence in presenting by nature. That being said, some of the early feedback that we have gotten from our previous outreach events and in preparing to start this project brief and take on this consultation paper is that some users are indicating they would like clearer information about the presentation of expenses that can help you understand how the entity is actually spending money to achieve its different service delivery objectives, deliver on its programs, et cetera, which really does kind of highlight the benefits of presenting by function. So there did seem to be a case for potentially revisiting how the presentation requirements are here. Obviously, the most extreme decision would be to take out nature and actually require function. That was actually one of the things that the task force deliberated quite heavily during our task force meeting. And I think what it really came out to be is that ultimately, yes, jurisdictions will make their own choices about whether nature or function works better for them. That really shows that there are genuine and practical benefits to nature and genuine and practical benefits to function. So it really solidified, I think, for the task force that the choice is important to retain. So that was, I think, a really good step for us to then think about, well, what next? Because again, IFRS 18 is out there. We are now thinking more about aligning with those IFRS 18 requirements for the statement. And IFRS did replace, the IS1 on which IPSAS 1 is based. And we could see that IFRS 18 did actually keep the choice. They still allow for entities to choose between nature and or function. They did have additional requirements now because this needs to be done in the context of categorization. Specifically, they actually say this is for operating, so your operating expenses. And I would say that's where the majority of things would show up anyway, so that classification and presentation of expenses in the operating category would actually be incredibly useful for a user, and that was what they were really trying to achieve. Now, one thing that we noted in kind of considering, well, how do we navigate enhancing our guidance was looking at the IFRS 18 requirement for mixed presentation. And this is actually where you would have your set of expenses, those line items. Some of them would actually have been based on function, and some of them would have been based on nature. This was a very direct response to some of their constituent feedback. I did notice in the basis for conclusions for the IASB that they actually didn't think that that would really help with comparability, but because they did have very strong feedback from some of their constituents to offer this mixed presentation, they ultimately listened to their constituents and allowed for it. So this was another point of deliberation with our task force to say, well, what does this mean for us in the public sector? Because ultimately, if we are trying to improve comparability, this would impede it. And so the task force was unanimous in saying that we should not actually allow for mixed presentation within our IPSAS. And that is because this comparability would be too severely impeded if we do allow for mixed presentation. Now, I think this is maybe a good point to bring up your question, Karen, about how this interface would actually occur. I think in this case, it's actually going to be more about how the disclosures would be presented if they do choose to present by function, because one of the requirements currently in IPSAS 1, which we would continue to include in the future IPSAS, is that if you present by function on the face, you must present by nature in the notes. And that's because the information that you get from presenting expenses by nature is actually so important and very useful for the public sector. So that I think works well together, that if you are presenting by function on the face, you still have that information in the notes. So I don't think I had too much else to kind of highlight from this discussion. I think from what members have seen, it's a very layered paper in that way, because we wanted to present what the proposals are, what that would mean in terms of changing from current IPSAS, but also in the comparison essentially of what this would mean compared to IFRS, GFS, our learnings from the GFS side, and trying to find the right way forward in presenting expenses in a useful way for users of public sector financial statements. So with that, I'll pass it back to you, Chair, before we go through the recommendations.
Okay, thanks very much, Eileen. I think that's a very clear summary. So Yakuba, you were first, and then Angela.
Thank you, Chair. I would like to come back to the prohibition. Can you provide more explanation on that? Because if I look at the way it is presented in IFRS 18 and other IASB standards, you are presenting amortization by function, but they are requesting that you present it by nature, for example, in the notes. So is there any public sector specific issue with those kind of mixed presentation? Because in the analysis, it is clear, but there is no example. I cannot figure it out. Thank you.
So I'm going to look to Andrew for this one because he brought a really good example up to the task force. It was about wages. Are you? I can try to articulate it, but I think you might. Okay, so one thing we were thinking about is, sorry to put you on the spot, is if you were to present by function, well, that would mean that if your wages expense is basically being allocated out to these functions, right? And that's one of the challenges, if you will, with presenting by function even now in current IPSAS, because you need to apply this judgment to do the allocation. So you've now allocated wages to these different functions. That means that the wages amount is actually buried in there, and that if you want to actually find out more information about, well, does it make sense that for this specific service line by the government, that the wages are such an extreme amount, you would still need to have that background information. So if you then have mixed presentation, it actually can impede your understanding about what information is actually within each of the items. So by burying wages within functions, for example, you don't actually get a good sense of one of the largest costs within the public sector. And so they said if you present in that way, it's not really helpful to you. So you should either just do only nature or do only function. I don't know if I've captured that well. Okay.
Yeah, so I think it was, so if you, it depends which way you're looking at it, Yakuba. So if you want to understand the wages and look at, am I managing my public sector wage bill responsibly, then you need that nature, element of it. So then you'd want that. But conversely, if you're looking at what's actually the cost of delivering a particular service that you're doing, then by function potentially would actually create more value for you. And so if you allow a mixed presentation and you're saying, well, I want to take the wages out because we are worried about managing my public sector wage bill, and you put that as a separate line item, then you're distorting, when you disclose the function of that service, you're distorting the amount that you're actually spending on it because it doesn't contain all of the expense because it's now split between two line items. And we were just worried about that sort of message creating a bit of confusion within the public sector space.
I mean, I guess, it'd be interesting to take a few more comments, but is that really a public sector specific difference? Which I think is what underlines Yakuba's question. I can understand the argument, but then it's going to depend on the nature of the controls that are in place in the jurisdiction and so on. So, I think is it a real public sector difference? Angela.
I'm smiling because as a member of the task force, I guess I'm more aligned with Yakuba's question and the chair's question, and I was not. I was on the fence at the time, and I started with, this is a flexibility mechanism that the IASB put in, and I was very curious as to why they put it in, which led me to, is there a public sector reason? Like Eileen, we both went back and had a look at the basis of conclusion, and before we sort of look at the specific issue, I was very conscious that throughout this whole project, comparability between different entities hasn't necessarily driven a lot of our previous decisions. We've just had a discussion this morning around flexibility and user needs. And where we did make a public sector difference, which I supported and the majority supported, was the location of the OCI. And we had quite in-depth deliberations, and I think we made a good call for the CP. So I sort of felt for this one just to kind of go, we don't like it, let's not go with that flexibility, let's prohibit mixed presentation. I just wanted to pause and go, do we have a good public sector difference to depart? And I had a quick look at the basis. And I guess one of the things that the constituents said is that mixed presentation in the for-profit sector is already in practice. That's what the basis says. And then in summary, the ISB allowed this flexibility, and they said, in our view, Standardisation of the structure of the statement of P&L, including the key subtotals, is sufficient to improve comparability without the need to take that standardisation a step further by being overly prescriptive in how expense line items are presented. And I think one of the examples I think was quoted was around allocation of, say, goodwill impairment. And I don't, so I'm quite interested in whether members are aware of mixed presentation in practice. So it exists in practice in the public sector. And whether we actually do want to think through what is the public sector difference here, and then maybe from a strategy point of view, how do we want to sort of raise this question in the CP? Is it better to sort of align, unless we've got a very strong public sector reason to depart, and then ask a question? Or is it better to sort of make a public sector amendment to get reaction? So that's kind of where I'm at. And Eileen knows that in the task force, I was like, oh, I'm not sure.
Thanks, Angela. I mean, I think, it's largely dependent on where the board wants to go on this. But I think if we do decide to depart from IFRS 18, then we do need to articulate something that is a clear reason for that, rather than just, maybe I'm not sure that I like that. Because that actually is our, that we're following our rules of the road approach here. And so that's fine if there's a genuine reason, but Karen, you're going to give us a genuine reason?
No, I'm not going to help here. But when I read the paper, I was like, great, this is fine. Natural, functional seem to be kind of the right options on the table. But as you say, it then does beg the question about why we're not following the rules of the road around this. And I was trying to think about when a mixed presentation, might be used. And I think I could only come up with kind of like the support activities of government. So, that you might want to present them in a different way, either functionally or naturally to other costs, because that provides information that is more useful. But that was the area where I thought that it might have most applicability in the things that, like the finance ministry, that is kind of, it works across the whole of government. So, would you want to treat that in a different way? So that's the only place where I could think that it would work. But, kind of ultimately, governments would need to decide that actually, or a government entity would need to decide that it presented its information in the most useful way. Is it going to get there in terms of concluding that it does? Don't know. But if it does think that, why would we prevent them from using it? So I agree with you. I think you could see how it might be used, but I think we'd have to have a really good reason for saying that it's not available for people to use.
Thanks, Karen. So I guess the question is, has anybody got a really good public sector reason why we should depart from allowing that mixed approach? Claudia?
I'm not sure if we find a public sector specific reason, but we had an IPSAS 1, and it didn't allow a mixed presentation so far. Did we have ever heard from any stakeholder that they have an issue with this topic? So we allow more when we was, in the past, we was restrictor, and now we say, oh no, we are more open if it's really necessary. So that's more a question. We have nobody has heard any problem with the past presentation, IPSAS 1, so I don't know.
I mean, perhaps just to help us on this, I don't know whether the staff, in terms of what is in IAS 1, did the IASB open up what was in IAS 1? Eileen?
IS1 did not allow for mixed presentation. It is really only because of IFRS 18 when they did their exposure and they heard back from constituents and constituents asked for mixed presentation. And that's when they ultimately decide to add mixed presentation.
Okay. I mean, so, you know, if you like, still, you know, if you like, the origin of the requirement seems to be that that was because what IAS1 said at that time. You know, I was still not hearing a public sector reason why we shouldn't allow that flexibility. You know, and I think that's the acid test: is have we got, you know, have we got a real reason? We're going to need to have a preliminary view on this one way or the other, and I think ultimately, you know, but if we decide we're not going to offer that, and it is offered in IFRS 18, we do need a reason why we're not permitting that flexibility. You know, and I think Karen was right to reflect on, you know, we were talking about needing to offer flexibility in terms of the way in which, you know, organisations are run, the public sector structured and that kind of thing. So I think, you know, back to the, is there a real reason? So I've now got flags up on that. I mean, I'll take a round of comments, but I think then it's going to come down to actually where are members on this. You know, and it does, I think, fundamentally, what we're looking for is there a reason to depart or not? If there isn't a public sector reason to depart, then I think our process would suggest that we should follow the guidance. So, you know, that's really what I'm looking for. Okay, so I'll go to Angela, Jonah, Andrew, and Renee.
Thanks, Chair. And it's just a quick response in the comment from Claudia. I too thought, you know, coming from current standard to now, what's changed, but I guess I looked to the ISB and they felt the new thing that's in the environment is the new structure, the new subtotals, the new focus on non-gap, which allowed them then to feel they could introduce this flexibility where we didn't have the structure and the subtotals. So, I mean, I'm literally just understanding the ISB's rationale, and I think that's could potentially be a rationale for us as well.
Thanks, Angela. Jonah?
Yeah. I think from the budget perspective in the public sector, the budget is very important. It's either a line budget or program-based. Program-based is mainly closely to functions. And so because of that, I think we can't have a mixed because of IPSASB.
Okay, thanks, Andrew. And then Renee?
So I can see the benefits of a mix that Karen was talking about in the different ones. So maybe will soften my view on prohibiting a mix, but I do think we potentially need to add more guidance just on, I do think there are potential reasons where you would do a mix that would harm the presentation in the public sector. So if you're thinking of a private sector, if you're doing function or nature, it's not really going to change the outcome or the usefulness that a user gets because it's all about discounted cash flows and the probability of those cash flows incurring in future. So if I've got a functional amount called administrative expensive and I decide to take something out because of its nature and put that in a separate line, it doesn't change the usefulness that as a user I have. I've still got what the expense is, what it's doing, and I can discount and get to my valuation. I think that's slightly different in a public sector perspective, where there, if you're trying to now look at the services, what's my ability to deliver on the services and the cost of me delivering those services? And there, if I'm presenting by function, it helps me to get to what's the cost of the service. If I take out something out of nature, it does change the nature of the information that I've got. And I appreciate that that would be a risk. I'm not then going to say it should be a prohibition, but I think we just need to find a way to then sort of mitigate that risk from potentially happening.
Thanks, Andrew. Renee?
Yes, this is not easy. I'm flip-flopping between the two as I listen to the conversation, but the thought I'm having is going back to the objective of this project and what constituents gave us as feedback and what they felt the objective was. And improving more comparability, but then now I also know that they're seeking more flexibility. So that's where that's where I find that it's tricky. There are two counterintuitive objectives, but so I am leaning slightly towards not allowing it, just to be more comparable. And I find Andrew's last point is compelling as well. What is the objective of looking at those financial statements in the public sector? But again, these are my thoughts, just slightly leaning towards one side.
Thanks, Renee. Ross.
So I think it's been a great debate, a lot of good points covered. And I think I'm pretty thankful we're writing a CP mainly and not an ED. So we don't actually have to have a perfect answer here, but we do need to capture some of the richness of the debate. So I think the points come up a few times. If we're not going to follow IFRS 18, we should put forward an argument, why not? But if we don't have that, we can acknowledge the board discussed that and didn't come to a view on a strong public sector difference to not depart, but still didn't agree with where IFRS 18 was. You can have richness of the debate in the CP depending on where you land, but the board does need to put some pegs in the ground on where we are and then put the richness in the CP, but it's not an ED, even though we'll have some illustrative portions of an ED. If there are areas where we're just not clear yet, I think it's better to have the open discussion and take advantage of having a CP, get the arguments out there, because often the constituents can help fill the gap.
So, I mean, as ever, we have the option of expressing a PV, or if the board doesn't actually get to a PV, then we can have a specific matter for comment and to, to expose the issue and basically say, well, we couldn't come to a view. What do you think? I mean, essentially, it does come down to actually. If we're following our normal due process, then we would look at the ISB's pronouncement and say, actually, is there a reason to remove that or not? Acknowledging that in this case, that actually allows an increase in freedom in terms of presentation, but that presentation, that freedom of presentation may or may not be driven by the budget and the performance framework, which is actually applied in that jurisdiction, and that is jurisdiction specific. So, there's not a knockdown reason, but I think it does come back to actually, can we articulate clearly, if we want to remove the choice, why, what's specific, and I think that's quite, the variety of structures and approaches to public management actually make that quite hard, personal view. So I think at this point in time, it's worthwhile saying, let's just see where the board actually is on this in terms of, and this is non-binding because we'll need to see the drafting back. So I think, can I have a show of hands for those that support the proposal from staff that we remove the option that has been given by IFRS 18, so do you agree with staff view or not? So those that agree with the staff view that we should remove the option, if you raise your hands.
So we have one hand up for the staff option.
Okay, and those that I guess don't support the staff view, we'll do that first and then we'll just get to, okay, so those against the staff view.
That's 11.
Okay. So let's ask the question in a different way. Which member, can I have a show of hands for members that would support aligning with IFRS 18 and allowing that mixed presentation?
Seven.
So to my mind, then that means we are in the territory where at the moment the board can't express a view, and therefore we should write it up as even-handed. And at the moment, the view is we ask an SMC, and that reflects, if you like, the discussion that we've had, that guidance has changed following our normal rules of the road process. That would suggest that we allow mixed. Equally, we're moving from a situation where that was prohibited in IPSAS 1, some of the sort of more nuanced arguments that we've had, and we leave it open. And that doesn't stop us at some stage, when we're finalising the paper. If members change their views, then we can reflect that. But otherwise, I think that's the way forward on that, that it's open, and we ask the SMC on it. Okay. So then I think we move into just a walk through then in terms of drafting. I mean, overall, just introducing the item, obviously, as ever, if you have editorials, offline, please, to Eileen. There are a number of the discussions we've had this morning, which will mean that there will be potentially some changes in position in terms of, to help us tell the story about, the sort of diversity in public bodies and what that means overall then in terms of particular statement of performance. There'll be some specifics as well in terms of picking up the points that members have made about, the nature of tax revenue, what it might be for different types of organisations. Maria's point about exchange, non-exchange, Patricia's point about the impact of current operational value and so on. One thing I did suggest to Eileen is she might also just look back at the preface to the conceptual framework and see if there's any other factors, because if you remember in that, there are a series of things that are unique about the public sector. So we might just, in terms of here are some things that are different, just reflect on that. So with those caveats, if we can now just walk through and get additional comments from members.
Not much else to add to that. I think that final note you made, Chair, is pretty well tied to the idea that we have for Appendix B, because we did talk a little bit during the March session about bringing in some of the, the very nuanced but important language we have in the preface of the conceptual framework. So I think there's, an ongoing build here, but something that we wanted to make sure we dedicate good time to in Q3, so we can take today's comments into that as well. Not much else to add. The paper kind of gives you a really detailed table about what has or has not changed in Chapter 4, and that was more just to help with managing the limited time that volunteers have to review all the materials from this week. So, the ask was that please focus on the revisions, but of course you're always more than welcome to read the full thing. So the intention for today, as Ian mentioned, is we're going to walk through the revised Chapter 4, collect any further comments that are of substance, and if you have any editorials, always happy to take them offline. And then I know we had Appendix A in here as well. As mentioned earlier today, we will be shifting the overall tone of that appendix, and also bringing in more explicit tie-in to the linkage, strengthening the linkage between GFS and IPSAS project that we'll have. With that, over to you, Chair.
Okay, perhaps what I'd suggest, Dave, if you can do the page by page, because that allows Eileen just to take notes as items are raised.
So I'll start on page 3 of the document, which is where we have the preliminary views, the request for comments. Oh, just Chapter 4, okay.
Okay.
Page 23.
Starts on page 23.
So page 23, page 24, page 25, page 26,
So we've got to page 26, Angela, just, sorry. Yeah, exactly. Yeah, okay, Dave, back to you.
page 27, Page 28 is table 1. Page 29.
Oh,
Sorry, I wasn't sure whether it was going to be editorial or not, but I'd rather raise it. In the table with investing, the last example we've got is revenue and expenses from impairments. I suggest that we remove that because I guess impairments could be in operating or investing. It just depends on the reason it's held for.
thanks. I think that was obviously Claudia's point as well. Okay.
So page 29, which is table 2. Page 30. Page 31. Page 32. Page 33 is table 3. Page 34.
Yep, Karen.
Thank you, Chair. Again, I'm not sure whether this is editorial or more substantial, but on B1, we talk about why the operating surplus or deficit total is important and useful. I wondered, do we explain that anywhere else in our literature? And I only ask that, and maybe I shouldn't know the answer to it, but I've found it the end part of the sentence quite difficult. So I'm fine with it about whether it's sufficient to maintain the volume and quality of services currently provided. I struggled a bit more with about achieving future service delivery activities and objectives, because quite often the resources that a government entity has is not within its control. So, as they say in the investing world, past performance is not an indicator of future performance. So I just struggled with the end bit of that sentence, but I didn't know whether that was already in our literature somewhere, or whether we'd already defined that somewhere, because if we have, it would be good to be consistent. Thank you.
Thanks, Karen. Are you on that one, Claudia?
Yeah, I think maybe I can't remember, but it's the definition what we have in the conceptual framework. That's why I said the financial performance in the conceptual framework only focus on these. The next point, which is surplus or deficit performance before financing total, is an important metric to communicate performance. It's not in the conceptual framework. So it would be helpful if you really link our explanation to the conceptual framework.
Okay, thanks, Claudia. That I think would be helpful. Okay.
Page 35. Page 36 has the preliminary view. And page 37 is the last page of chapter 4.
Okay. Eileen, back to you then.
Thanks, Chair. So I know we didn't talk about like how exactly the other papers will impact this, but let us take that away. We will be modifying Chapter 4 based on the views that members have shared. I would say from staff side, we're just trying to get ahead of the timetable to try to put as much out there for you guys as possible, because ultimately a large part of this is how we articulate the thinking by the board on the various issues and the various approaches that we've tried. So it is a process. So thanks for the feedback, and we will continue working on it and reflecting the discussions today. The only other note I wanted to make, we don't have to flip through it, was Appendix A, which kind of ties back to our GFS discussion. So again, we'll be shifting the tone, we'll be making the linkage, and we'll be bringing back a revised version of that for you.
Thanks, Eileen. And I think, again, if we link into the what will be an exposure draft by then, we hope it may well be possible to shorten that quite considerably. Anyway, that's something to, during the quarter, the task force should actually produce quite a lot of material, so that will help in that. Okay, so I think that brings us, project plan.
Thank you, Chair. So we usually provide an updated project plan, or at least a spotlight of a project plan as part of our X.3.1 supporting materials, just to continue letting members know where we are in the journey. And obviously, we've seen that developing a CP is really hard, and some of the discussions may take a few kicks at the can to kind of get there. So what we wanted to do today, though, is include it in the presentation, as it will tie into Ross's PTT report immediately after this. I think in reality, the place we are at in the project plan, I think, is reflective of the fact that it is hard to have these discussions. We haven't looked at presentations since essentially came out in the 2000s. There has been a lot that's changed in the overall reporting space. But I think even on this project, we have gone through, a few staff changes. We had a task force chair change. And I think it's been very clear from the last 3 meetings, too, that when we started discussing statement of financial performance, it took longer than the initial intention. I think we originally planned for 1, maybe 2 meetings for it. And right now we're on meeting 3. I think we've gotten through a lot, which is great. And thank you very much to the board for doing all of that. But, there's still a little bit more for us to get there. And that does mean that, we've had to delay some of the other work we need to do on the statement of changes in net asset equity, and also the disclosures of information, where the MPM component from even IFRS 18 will be an interesting, I think, discussion for the board once we get there. And of course, this is also complementing with how we continue developing the CP, as well as how the IED will form based on the preliminary views that we form. So with that, I just wanted to, I'll put it on a slide and open it up for any discussions, comments from members. And I turn to Ross for any further views as PTD. Or Dave, never mind.
I would just say that, as Eileen mentioned, coming out of the March meeting, staff spent a lot of time coming up with what we thought was a realistic timetable to get this through to CP. So just wanted to highlight, we spent a lot of time really thinking about when we could address issues, what was a reasonable timetable to get the board through each of the items. And you'll see it in the last session of the day when our final proposal is. But just wanted to highlight, this wasn't just done on the back of a napkin. We spent a lot of time thinking about what was appropriate and when was a reasonable timeline for the IPSASB.
Russ?
And just maybe to underline the fact without getting into the details, I think this is realistically what we can achieve without burning out the staff and the task force on this. There's a lot to cover. It's important that we get the CP right. CPs are hard. The board traditionally does struggle with CPs. We don't do them as often as exposure drafts. They always have their own specificities and complications and, different styles. So, each CP has its kind of own look and feel and different approach. So they take time to develop, and to develop a good CP sets us up well for an exposure draft that goes smoother, because we'll have the input we need to make sure that exposure draft, when we put out the real final exposure draft, covers all of the points and reflects the public sector specificities. So happy for any comments on this, but this is the realistic timeline as of today and what we'll be able to deliver from the staff side. It's not really up for negotiation to pull things forward or not. And to meet these new targets, we will need to make the progress that's on this, or we'll have to slide a little bit even further. And there's a lot here. And that's not a failure, I'd say, by the board or staff. It's acknowledging the challenges that we have after looking at presentation, as Eileen said, after about 20 years in detail, now having a conceptual framework that has guidance on presentation and disclosure, and really having a good debate around the areas where we need to provide appropriate principles for the public sector. Thanks.
So as you say, I think it's useful to reflect on that, but it's also in the context of actually we've got quite a few other things on the agenda. And so, I think in terms of board agenda time, really the proposed priorities are on climate-related disclosure zone operations and finishing tangible natural resources, and therefore this is important, but not as urgent as those others. So therefore, in terms of thinking about the agenda planning going forwards, the variable that we've got is actually the timeline and when this gets finished. So, I think the conclusion from this is that the actual formal approval of the CP is likely to be in, say, March or possibly June next year, and that's just a reflection of the reality. But there's no point in actually really kind of, trying to kill ourselves, certainly not staff. It's better to take the time and get it right, I think is the conclusion. And as has been said, quite a lot of debate and discussion about this, but I think it's better to be real about it going forwards. Okay, so thank you very much, Eileen. I think, but reflecting on some great discussions, and I think, I was saying this to Eileen at the coffee break, actually, remembering back to those sort of, the very initial discussions that we had when we were in Riyadh back in December. We were really finding it very difficult as a board to kind of get our sense of direction on this and what were the priorities and so on. And I think there's no doubt about the fact that our thinking has moved on considerably. I think, partly, obviously, Eileen's now well played in, but I think the task force is providing a lot of, debate, and I think the board's provided a lot of good debate. So just thank you, everyone, for, moving us forward in this way. And I would echo the point that Ross made about CPs are always challenging. It's basically not only evolving our thinking, but it's also how do you tell the story, how do you explain that? And I think we've seen in the past, we've ended up with some quite long CPs, and when you end up with a long CP that's perhaps not as well focused, then you don't get as much good input because people are kind of like, hang on a moment. So it's that whole thing about it takes time to focus and write shorter, but I think that will pay dividends. Good. Okay, so we are at the stage in the agenda where we just need to sort of sort ourselves out in terms of prioritisation. We've got one formal item to go in terms of the actual formal meeting, which is Ross's Programme and Technical Director's report. Then the idea is we formally close the meeting at that point in time. We've indicated that there will be a staff presentation, which is actually to take everybody here through the plans for the forum in September. And then I think there's really, at that stage, we can break for lunch. I think there's a question as to whether there's any desire from board members for a board-only session. That's an option that's open if there are particular issues that board members want to raise. Otherwise, we can conclude, after the presentation on the forum. So, very much open to board members on that. But I'll leave that one with you at the moment and go to you on the Programme and Technical Director report, Ross.
Thank you. So I'm going to take you through the Program Technical Report update. And I always like to put a picture that has something to do with where we are. And this is a great place. Well, actually, I won't. Does anyone know where this is? Maybe ask a member. That's right. That's where the Toronto Blue Jays play, the best team in Major League Baseball.
We're not debating that here.
No, it's not even up for debate because I doubt there's any other baseball fans here. But in the past, when we had the opportunity around the June meeting, we often would do informal social events and find tickets to watch the Blue Jays. So those who've been there can see the field here. They've done a great renovation in the last few years, so it's much updated and a great place to go. And unfortunately, the team hasn't been playing here this week. But they're back tonight for anybody who might still be around. And if you're interested, I highly recommend an evening at the Blue Jay game. Is a lot of fun. And Friday night is what they call City Connect night. And they wear special jerseys and they kind of make it fun. So if you're still around and you have some time, walk down to the Rogers Center and watch the best team in baseball do what they do best, play baseball. So moving on to the actual business, we did have an approval today, or this week, with the amendments arising from application of IPSASB 46 and the items we did approve. So those will be processed and we'll move those forward. So I just wanted to say, good job. Let's go IPSASB. And wondering why it's let's go IPSASB, because if you did decide to go to the Blue Jays game tonight or ever, one of the chants you'll hear is let's go Blue Jays. So, you know, when I say let's go IPSASB, I mean it the same way I do when I cheer for my favorite team. So just part of the normal update, I like to highlight the things that we're planning to bring to the check-in meeting. And as you can tell, this is a pretty long list of things, but we'll do our best on the staff side to give you the papers that help facilitate us getting through these 3 items that we'll bring to the check-in meeting on July 24th. Again, there may be an item or two based on how far we make it that we just can't get in time, and if that's the case, you know, we'll push it to September, but we do want to take advantage, particularly on climate and tangible natural resources, to have substantive discussions on a few issues, to set up the appropriate discussions that we need to have in September. And obviously, the work program consultation, we did talk about doing that full page flip with the markup from the changes that the board asked for at this meeting. So yeah, nothing much more to say on that other than, you know, this is, if you don't know much about the Blue Jays, this is their president of operations, Mark Shapiro, and they're talking about who they're going to draft and what they're going to do next to make the team continue to be the best team in baseball. So just like IPSASB staff, when we strategize and all the items we're going to work on in papers, put a lot of time and effort into it, and that hopefully will result in great outcomes at the July check-in meeting, just like the Blue Jays.
And just to emphasize to the board, you know, that what we're aiming for there is an initial discussion with the board on those topics. So it may be that we don't conclude on that, but it's really to sort of actually get the discussion going so we can see, okay, have we got consensus on that? Are we fine with that? Do we want more information and more discussion, you know, support for discussion from staff? So it's just actually to kind of really get the debate going.
Thanks, Ian. And then updated project timelines. So I just wanted to put on a slide here a number of shifts that we're having at this meeting. And again, I'll be posting an updated full work program that reflects this after the meeting. So at the top, the main thing is we now have, under our climate related disclosures project, we now have 2 streams that'll be reflected on the work program. The own operations stream with the timelines on here, and the public policy programs. The middle column on this is what the June work program said in your papers, and what it's going to say after the board is the far right-hand corner is where we are now. And again, Eileen just walked us through the changes on presentation of financial statements. IPSAS 33 was up for approval. Unfortunately, we didn't hit that one out of the park like we did on application of measurement. So we're going to have to take another swing at that one in September. Measurement COV, we heard the update on this morning on the way forward on that. So that'll be reflected on the work program. Strengthening linkages between IPSAS and GFS. That one, we just didn't have enough agenda time for that this time, so we didn't put it in the game for the June meeting. We've decided to put that player in September for our next discussion. Making materiality judgments. You know, we had a first discussion on that, but we've updated reflecting where we are in terms of board agenda time, the balance of the year, where this will be reflected. And when we discussed improvements, we discussed that we're going to continue to pick up all the wins on the improvements as we approve them, and then we'll put them out as one final exposure draft, and we're targeting March of next year for that. So that's it in terms of project timeline updates. Thank you.
So thanks, Ross. So there's quite a few changes there. So just pause and see whether there are any sort of comments or questions. Yep, go for it, Karen.
Just a quick check. So natural resources will be December.
That's what we're working towards right now.
Yeah,
no change at the moment.
Okay.
Rena?
S1 together with the PPP.
So that's not a committed project on our work program right now, so it won't be reflected on our work program until after we have our next work program consultation, if that's one of the projects the board decides to prioritize and commit to.
Okay, thanks for that, Ross. I mean, I think it shows, it's trying to balance all the various different, try and make progress, but make sure there's time for discussion and so on, as well as actually, obviously, underlying all of this is particularly staff resource and making sure we've got the right resource in the right place at the right point in time. So it is a constantly moving picture, but I think that shows you all the various different pieces that are moving around at the moment. Dave?
I was just going to say that even though there's a lot of changes here, it actually makes me reflect on how many decisions were made at this meeting and how good this meeting was, because it was able for staff to map out better when we actually thought realistic timelines were. So I just wanted to make sure that no one took this in the wrong way, because I look back on this meeting and it actually showed how many good decisions and how much progress was actually made at this meeting. So thanks to all members, because I think we had a really good meeting.
And probably actually, in terms of the fact it's updated, the one thing that I don't spot on there is tangible natural resources, and that hasn't changed. So again, and that is that's a result of, back to that point, that we've taken the decisions that staff were looking for. So I think that's been very important. Okay. So as you say, Ross, those will now be reflected in terms of the changes in timelines. Karen?
Quick question. Can you remind me when the work program consultation, when will the board see the outcome of that? Because I guess that's further down the track too.
So do you mean when we'll see the updated document, or do you mean when we'll start discussing it?
When we start discussing it.
So if we make the milestones on the work program and improve it in September, it'll be published in October, go for our normal 4-month exposure period, which will take us through to January, February 2026. So the earliest we'd be able to have a first discussion of responses would be March. And the probably substantive discussion where we start to make prioritization decisions would be June 2026.
Great. Okay. Well, I think that then moves us through to the end of the formal proceedings in terms of the board meeting. I think, as you've said, Ross, I think actually we can reflect on a very successful meeting in terms of clear direction on our major projects, climate related disclosures, and the decision to move that forward in 2 phases. Tangible natural resources, we've also moved presentation of financial statements forward. We've had good discussions in terms of the work plan consultation. I think all of that was set up well by the CAG meeting on Monday. I think a lot of very good input, so thank you very much to the CAG and to staff for setting that up. I think that's really helped us in terms of input to our discussions, a great set of papers from the staff. So thank you very much to staff and to the task force, task forces that have contributed to that. And I think also some good work in the member collaboration time as well. That's really moved us forward in a number of areas. So overall, thank you very much, everyone, in terms of the formal meeting. And I think with that, I close the formal meeting. And I think we stop live streaming at that point in time. So we'll just give a minute or so to confirm that, and then we'll start to talk about the forum.